Hey, what's up, Bob Mortgage Nation? This is the 87th episode of the Mortgage Report. All right, so this mortgage report is what I deliver to you on a weekly basis every Monday for the last 87 weeks. And what we're doing here is we're telling you kind of what is happening in the economy, how it's impacting interest rates, and I'm giving you my lock or float position for the week. Now, if you want to follow me on Instagram, okay, just search Bob Mortgage, and that's where I'm going to deliver to you guys what's happening on a daily basis if it's impacting my lock or float position for the week. All right, so we had a really good interest rate week this week, so let's get into some of the economic things that impacted the market and how it impacted mortgage bonds. Okay, so on Wednesday of last week, we had the Fed come out and say that they are not going to be changing interest rates or raising interest rates for the rest of 2019. That was a very positive statement for mortgage bonds. They also came out and said that they downgraded the outlook for the economy and its growth to 2.1% for 2019 versus where we grew in 2018 at 3%. Now, additionally, and this is the big part of the news that we were looking for, okay, is what were they going to be doing with the balance sheet? Now, the Fed is currently taking about $30 billion in treasuries and $20 billion in mortgage bonds and letting those roll off on a monthly basis, okay? But they said starting in May of this year, they're going to roll off about $15 billion in treasuries and keep the $20 billion in mortgage bonds. So that means they're going to be buying $15 billion in treasuries. And the market really reacted very positively to that statement on Wednesday, where we got a significant increase in mortgage bond pricing, which decreased our interest rates. And then on Friday of last week, we got some really good news in that the existing home sales grew at 12.1%. Okay, that was like way above expectations because we were only expecting, this was in February, we were only expecting about a 3% growth rate on that. So we took another big leap in bond prices. So, and that was pretty much what they were looking at from the National Association of Realtors perspective. They were just really looking at it at the fact that because we had strong economic gains with consumer confidence. We had a rising income. So all those things kind of putting into place, created a really big opening for February in existing home sales, which really makes us feel good about what's happening in spring and summer. So if we take a look at the charts, you'll see right here where we're talking about the Wednesday pickup, right? This is where we realized that the Fed was going to be changing the balance sheet with their purchases of the treasuries, and that's what gave us the big bump up, along with their statement of not increasing interest rates anymore this year. And then we broke above this ceiling of this floor of support. Well, it was a ceiling of resistance when we broke above it at the 102.618 mark. We broke above that, and that had been like the first time that we've even tested that mark since February of 2018. And this run right here was due to Friday's existing home sales numbers of 12%. So as you can see right here, this is our new ceiling of resistance at 103.379, and then our new floor of support is sitting at 102.618. So guys, we're in a really good position. I'm going to continue. I'm in a floating position. I'm going to continue in a floating position going into this coming week to see how the market opens up on Monday, and then how we need to play it. Because I do feel now, with a new floor and a new ceiling, we have a lot of room to run up to the top, and hopefully we can establish a very nice sideways trading range. So if you have not locked your interest rate and you're closing in the next 30, 45 days, you're in a really good position. You should have been able to pick up another 1/8 of a point or so on that rate. And at the same time, if you're not looking at it from a rate standpoint, you may have decreased your discount points to get the rate that you're looking for. So you're in a very prime position. Look, I've been a mortgage advisor over the last 20 years, been blessed to provide financing to over 25,000 families during that time period. I watch the markets on a daily basis so I could deliver to you to the right home loan at the right price. Give me a call. With Bob Mortgage, your dream loan is already within your reach.